RationalInvestor.com's Daily Brief. The answer to your question is learn the goddamn process, trade your trading plans, don't take too much risk on any one trade, and just let yourself get rich. Hello, everyone. Welcome back to the RationalInvestor.com's Daily Brief. Let's see. Actually, interesting comments in the lounge here as we're slowly working through this. What I hate to say it, it feels like it was a buy the rumor, sell the news event there on Bitcoin. I'd actually kind of argue that there's parts of the market that actually look very attractive, sort of accumulation windows. But interesting also to see stock market caught a pretty nice bid here this morning. We've been working a long signal here over on the Algo from the stock market. Actually, we had an Algo flip bullish signal there on Bitcoin. And more importantly, probably on the crypto 30, because actually, I talked to a lot of people on the site and they're actually feeling kind of bullish of crypto right now. Like the altcoin markets. I did put out a tweet earlier today suggesting that I think actually the money to be made is in things like Ethereum right now. Geez, looks really attractive. Anyway. So obviously people in Bitcoin land, I think they're getting over, it's a bit of a hangover. And a very, very significant technical event happened there. Good old Mountain Man tag came into a liquidity pool, as some people on the internet like to call these levels. I like to call it an institutional fingerprint. This market was moving up. Somebody stopped it, and oh boy, did it ever go down following that. So clearly, unfortunately, the public doesn't really put tops in the market. These institutional guys do. So you could argue that's where they're short, and that's where they put the last top in Bitcoin. So we run up into that area. Do they let these stops get tripped up as a liquidity pool, like we said? There's probably a lot of people had stops there. Also, too, banged into long-term trend lines. We've been talking about this trend line for a while now. Even put tweets out about a few days ago about this. In fact, actually, I think since I last talked to you guys, quite a bit has happened here. My apologies. Yesterday, we normally have one of the TRI partners do the Thursday show, Julian, but unfortunately, he, I guess, was traveling and got a bit of confusion there. Wasn't able to make them video. So sorry about that, guys. And girls and houseplants and all that. News today, interestingly enough, if we start off sort of the bigger picture, and conjecturing lately about this US dollar index, are we breaking down and heading down in earnest? And, is the trend is your friend, lower highs, lower lows, blah, blah, blah. Following, it was interesting because we did have a short setup that came out of the last Fed meeting, and the market worked its way right down into the bot target, doinked it, and then literally just dead cat bounced straight off of that level, which was quite remarkable. Tagged into a Mountain Man, 61.8 fib right there. Also, too, there's a gentleman, ICT, I have no idea what the hell the guy's real name is. I think this is sort of one of his levels. I think he calls it like a fair value gap or something along those lines. So interesting. I often see that the market loves to rally into sort of Mountain Man. And then if you juxtapose it with that fair value gap concept, it kind of makes sense why we stopped where we did. Then we started just going sideways here. I don't know whether the market's really a bull or a bear. The consumer price inflation still kind of chunky. It's probably the best way to describe it. I'm very worried that if these central banksters start lowering interest rates now, you could actually have the whole inflation thing just take off like a rocket. Like people want this sort of housing bubble fugazi thing just to keep going. In fact, my country the whole damn economy is pivoted on the housing industry. If the housing industry does roll over, this country is in huge trouble. Uh, yeah, thanks. So you can kind of see that, the politicians are talking to the banksters, and the banksters, they're not, I just don't think that they have any interest in lowering interest rates, because that will fuel the inflation problem, and it will just keep prices high and moving higher. You see the stock market's basically at or near all-time highs, and that's supposed to be the ultimate leading indicator of the economy. So that must mean the economy must be doing relatively well. If we go on a weekly basis, I mean, there's the S&P 500. Looks like it's brushing up against a new all-time high. So how on earth can you justify lowering interest rates in the face of that? This thing will go crazy if that happens. I think what's happening here, though, is the quantitative tightening. Actually, there was a gentleman, especially in my country, the central bank in my country is actually kind of backed off on the quantitative tightening. They're not so orgy-tastic about it. And I think that's where sort of we've noticed that the bond market started to basically firm up. I don't know whether there's any anecdotal evidence that the Fed has actually eased up on their quantitative tightening, but you can clearly see that the bonds have rallied. And this gentleman, I mean, I suppose I can share the video in the after party for site members. He had pointed out that as of this point back here in October, we were wondering what was going on, like what caused this market to pivot there in October. And it turns out if you actually look at like the Bank of Canada's balance sheet and what they were doing, they actually stopped their sort of tightening, and they actually started injecting money back into the market. I don't think that these central banks move independently. I think they move all in unison. And I get the impression that, and the market started pricing in Fed rate cuts and all that. And I think probably the best thing, well, not the best thing, what probably was moving all this was the Fed said, okay, we're probably not going to be able to change interest rates. I think they have to stay put, or else inflation will go crazy again. But maybe we're going to back off on the quantitative tightening, maybe not go so hard. I would like to find some data from the US to quantify that thinking, but I definitely saw some data yesterday from the Canadians. And, if we look at the Canadian bond market, it's basically the same thing as this US market, which actually leads me to believe that, we might actually see I do find it interesting that the Canadian stock market is not anywhere near at or near old highs, and we have a major inflation problem in this country. But I get the impression that over the course of the past year or so, and you can kind of see the M's, and I've been talking about how bearish I am and how worried I am about all this, and then all of a sudden the Bank of Canada goes in and starts restricting their quantitative tightening, if that makes any sense. And all of a sudden income W's. And now you might even argue, if they continue on this path, that this thing's actually pointing to much higher prices for China. So maybe China will actually start catching up to the Americans, because China has vastly underperformed of late. But I wanted to show you the Canadian bond market. These are the Canadian bonds. So as they've been, so interesting, I had that written there. As they've been, the Bank of Canada has been quantitative tightening. The bonds, of course, have been selling off. But like I said there a moment ago, I was wondering what the hell happened there. And actually, this gentleman had pointed out, he had a nice graphic that showed that the Bank of Canada stopped their quantitative tightening, and they actually went on the sidelines. And that's why the bond market lifted as strongly as it did there, because they just aren't selling any bonds right now. So do they come back and start selling bonds again? Well, only time will tell. But I was just wondering why this sort of reprieve and the stress in the market happened. And it turns out that there is some anecdotal evidence that it's not a lowering of interest rates. And now actually, especially with yesterday's consumer price index print, the sort of statistical odds of them lowering interest rates on the short end, that would be this 2-year paper, We're hearing actually that's on the kibosh. But, like I said, they're manipulating the yield curve because they own so much of these damn long bonds that I think actually they're doing quantitative easing, but maybe think of it more as not quantitative tightening. And as a result, they're actually manipulating the long end of the curve rates sort of coming off and stabilizing. And I have been hearing a lot of people on the site. David O pointed this out in our Tuesday stock club meeting. Saw somebody in the lounge point this out this morning, that the yield curve is slowly coming back to normal, quote unquote, for the economy. So anyway, food for thought there for you. All right. So point of the matter here is the inflation data that we actually had out today was relatively tame. And I think that's one of the reasons why you had the bond market actually jump up quite a bit here. These are prices. That means yields go down, the opposite of that. Then on that event, with the bonds all cranking higher, the stocks went, well, hell, if you're having a party, we want a party too, right? And the stocks just took off like a rocket. We're all booming higher here. NASDAQ breaking out and the whole thing. And then about an hour or so ago, everything started to back off here. Now, we are coming up. We did have a Fed speaker that came out, I guess about an hour or two ago, and he might have like thrown a wet blanket on this bull run that we're enjoying here today. But the news headlines this morning was producer prices unexpectedly fall, which is the further validation that probably the Fed doesn't need to raise interest rates anymore. And of course, you guys have all seen my 4-year cycle. We used to follow the euro dollars. I guess we can do it on the Fed fund futures now. I don't think that there's a hell of a lot more increases in interest rates here, but in the short end. But probably reports like this are just going to just simply say, you know what, the Fed's probably done raising rates. The only question is, are they going to drop rates anytime soon? This isn't enough information, I think, especially with the consumer inflation numbers that came out. I think it was yesterday, or might have been the day prior to that. Where are we here? They were pretty chunky, right? Yeah, I guess this was here. So where are we here? Yeah, US CPI, and the inflation rate, you can see it actually ticked up quite a bit. And then, the actual sort of headline inflation rate year over year was about 10% higher than what the market was forecasting. So I don't think that they can lower rates in the face of that at all. I think what you're going to see, and I know it's very long-winded, and I hope you got some value out of that, is and as I said in the after party, I'll share the video with the site. There was one gentleman who was pointing out that there is anecdotal evidence that these central bankers are coming in and reducing their quantitative tightening, and so that's helping the long end of the curve, and that's where this sort of stimulus is coming from. All right. Wow, that was a mouthful. Sure hope you got some value out of that. I mean, obviously, this audience are very sort of focused on crypto, and in a weird sort of way. And yesterday, of course, was our big Bitcoin event that everybody and their brother's been waiting for forever. I do find it interesting that this event now seems to have happened right on the event of, we could probably put here like ETF event, right? There's like 40 or 50 of these ETFs all being floated here. And it's just a ridiculous number. And what a big surprise. That's now actually going to probably paint our top. What was interesting was to actually look at the price action. And, if anything, we do a module on reading the DOM and understanding order flow. And interestingly, in crypto, there was this site, and they've been around a while now, called Tensor Charts. They have this really cool tool, and actually, it's even free. So I don't even mind just talking about it because you should be able to access it. But this the what do they call it? The circles or bubbles or something like that. Counters ratio. That's what it is. Um, it's a really cool anecdote of when sort of the public is like panic buying, because it's a study of market orders versus limit orders. And when you get these big bubbles, what it means is all of the orders that are coming in are all market orders. And keep in mind, most of the public, they don't understand that you can actually set the price that you want to pay for something. They're just like, okay, where do I hit the buy button? Hit the buy button, boom, I just bought. Merry Christmas. So, this is a really cool tool to use to sort of gauge what the sort of who's participating in the market, and is it that anecdotal? And this was clearly just market buy orders by the public, just absolute orgy central all through this event, right into the actual official announcement. The Bitcoin ETFs are alive. And I mean, gee whiz, this is ridiculous. And I was putting tweets and stuff out about this. I mean, why on earth are they going to do so many goddamn ETFs? This is insane. And the thing is the market going to be able to absorb all of this? I don't know. That's a question unto itself. But look how many bloody Bitcoin ETFs there's going to be now. This is nuts. And like if all of their customer base were like, yeah, we want to buy Bitcoin, we want to buy Bitcoin. Yeah, yeah, yeah. Okay, well, fine. Maybe one or two of these things could absorb all the buying power, but right across the board, oh my goodness. And the problem here too is that every single person that's involved in any of these ETFs, the IPO events, they probably got paid in units of these things. And then also too, you get the whole, and that's really sadly what I think a lot of this move is. Because remember Mr. Fink, he came out right here in the middle of June and he said, I want my ETF, damn it. And I'm going to pull all the political strings I have to make goddamn sure it's going to happen. Right. And sure enough, boom, it happened. Thought it was interesting that right out of the gate, where we are right out of the gate, almost all of these other ETFs, it was like mysteriously, oh, you're not allowed to trade them. It's like, what? I guess I was showing this over here. It doesn't really matter. Like a lot of these, the HODL and all the, yeah, anyway, on the site, it was cool to see. Fidelity says that customers cannot buy this thing. Well, why not? I mean, the whole thing it just smacks of just insane corruption. It sucks, but it really does. And like I have Brian, cynic at best, just sitting there commenting, aren't these humans wonderful? Isn't it incredible that if you actually watch them in action, how bloody corrupt the whole thing is? I mean, it's just stunningly corrupt. But anyway, the point being that I think a lot of these, they actually put like short sale restrictions. So you couldn't go and short this. The only thing you could do is if you were long these things. Now, who would be long these things? Oh, well, how about the GBTC people? Is this now graduated now from the OTC market to actually the bulletin, or to I think this when I was looking at it the other day, it was like when you type it in here, it's like listed on NASDAQ now. So it's actually like a legitimate exchange. So anybody that bought these things in the OTC market, or, was accumulating, and was part of the IPO and part of the shill and stuff like that, well, they're the ones that are going to be selling into this rally peak right out of the gate. And I thought it was interesting that the only one that you were really allowed to trade right out of the gate was this iShares, right? And this is purely, of course, Mr. Fink, right? And that was the guy here, this guy, now I want my goddamn ETF. So, you could see that quite literally what happened was, no one else is allowed to touch this damn thing until Peter Fink has given the approval that, all right, the rest of the market can now participate. Anyway, blah, blah, blah. So, how long ago was it that we had the Coinbase IPO? It wasn't that long ago. Keep in mind that actually a lot of these IPOs actually look exactly like this. If you actually pull up, thank you, you pull up the Facebook IPO chart, it looks almost identical to this. I mean, literally, Facebook IPO'd and it fell in half. I mean, this one, holy crap. I mean, that I actually remember people on the site saying, "Oh yeah, I talked to my uncle Bob, and he went and bought a bunch of stock at $400 a share." And we're like, "You got to be kidding me! You didn't, did you?" And I mean, look how far this thing fell. So most of the time, the rule is, and you can see there's the bottom eventually. I mean, for Pete's sake, I mean, I suppose you could argue, I bought a little bit in here, so what the fuck? But it looks to me like clearly there's your bottom. It looks like a nice head and shoulders bottom, W bottom, the whole thing. You might even say maybe wait for like a monthly W to come in to actually mark the bottom. But I guess the point I'm trying to make here was that was $400 and this was $40. So literally 10x it fell. Can you say negative 10x? I don't even know. I don't think that this thing's going to fall that much. I would be very shocked if we, well, I suppose this is probably an interesting chart to leave on the screen for you to think about as well. But here is that iShares Bitcoin Peter Fink thing. They always say gap and go kind of idea. If we lose the gapping bars low, then that's a bit of a pivot reversal. It's interesting too how they're going to leave a little bit of a gap right in there as well. But simple TA 101. Since we had this candle here, that's technically a trading range. So if we lose the low, then really what it means is we're just going to trade to a trading range equivalent on the other side. So that paints a target just in the near term of down here around 22 and a half. So I tell you, this IPO, that does not look good. That's not really the way you want these things to look right out of the gate. And the rule that I said, like I said, Facebook, it came out twice what it was supposed to be valued at, and it fell in half right out of the gate. So the rule is that these things generally, when they IPO, they should be worth about half of what they actually get listed at. This thing it came to market at $28. So my hunch is this thing's going to bottom around $14 a share. Ugh! Somebody record that. Now, the irony of it all here is that if we do all of our simple TA, don't overthink this, right? You saw that counters ratio chart. That was a great, piece of anecdotal information that was the top. That number, and this is an interesting number, 49048. And I'd be curious. Does anybody know? Is anybody a Freemason out there? Is anybody a numerologist? All that kind of stuff. That seems like a really interesting number. 49048 is the high that they printed here for this. And for whatever it's worth, if you go back and you look at key pivot highs and lows on Bitcoin, sometimes you get some really interesting numbers that you just have to say, there's got to be like there's a word for it, right? The Freemasons, right? And I was posting that in the lounge. There's something suspicious about that. One thing I will say though, that and there might be a saving grace that maybe we might see another push higher. It might happen like into the halving event, although that if that was the top of this cycle, maybe, but I wouldn't be surprised. We never did hit this 50,000 number. So the 50,000 big fat round number, a little surprised that didn't get hit. Just between me, you, and the fence post. But you can see, we actually call this in candlestick land, we call this a shooting star. It's an anecdote of a toppy market. Probably one easy way for you to look at Bitcoin is, maybe easy, maybe difficult. I don't know. If you're into this whole sort of Feigenbaum and chaos theory, and if you think of bifurcation, I've just sort of painted a little sort of what does bifurcation kind of look like. I get the feeling that we're going through one of these bifurcation processes right now. And you never know. I mean, maybe this is, and usually these bifurcations kind of look like the pattern of a bull or bear market. So, in this case, we want to work our way up into 2.618. This would be the bifurcation path, but in reality, we do something like this, but then we get up there. We might find that we actually have to come right back down, right? And this would be the Wyckoff check. Well, guess what? Not we might have to do it. It looks like we just did this. And I do find it interesting that the Wyckoff check, right, which is that double bottom, that big W right there, doink. Look where we are. We're like sitting right on it right now. We're now back into tails, right? Wicks and tails like to be eaten. Candle body lows for trade location. Mountain Man. Didn't we just talk about Mountain Man, right? Mountain Man up, where was that? That was this chart, right? How powerful is Mountain Man in the market? Do you have a newfound respect for 61.8 Fibs? So the fact that we just banged, we just did the bifurcation, a retrace right back to the original breakout, back to Mountain Man, back to Wicks and tails like to be eaten, back to some interesting trendline support. And what does that Beamish guy call this thing, right? That's my reload zone. So believe it or not, actually, I don't mind the idea of us looking for some sort of bottom in here. This was just nothing more than buy the rumor. And man, did they ever bid this thing up? Don't get me wrong. I mean, this was just ridiculous. One direction for, what do we say here? I mean, like, look at that move. Just relentless. Do we maybe just need to now clean this up? And, in a weird sort of way, here's another image of that bifurcation kind of conversation where, we broke out through this 2.618. We went up, tagged 4.669, and we came right back down to 2.618. And I have a funny feeling, if this is actually a top, then, this is going to look like some sort of, head and shoulder. So there's your left shoulder, neckline, head, back to neckline, right shoulder, etc. Right? I wouldn't be surprised if there's some sort of pivot somewhere in here. It wouldn't surprise me. I don't know whether we have to come all the way back down here. We might. We'll cross that bridge when we come to it. What I did notice is, and this is probably the one that probably we want to pay attention to. I've been talking to you guys about this, and I'll leave off this free broadcast of this. We can go into altcoins, and there's interesting conversations to be had about things like Solana and stuff. We have trade location. Again, there's a big bifurcation level, 2.618. 1.272 to 1.618. These are alt A, B, C, D levels. And you've always heard me say that at any given point in time, you should expect 38.2 retracements. And you can see how far that is. So this is a pretty risky market. I think the last time I talked to you guys, I said, at any given point in time, we could lose 25%. No problem. Just like that. Having said that, though, what's interesting about this is if we zoom out on an image like this, and really probably the better one to look at is Ethereum. Where is that? That's over here. If we actually do the same fib study from low to high, and then that same institutional fingerprint study that we did on Bitcoin, how we went up and cleaned out that liquidity pool, there's Mountain Man there, right? Does it make sense why we stopped there? Big trend line resistance. If we actually go and look at other altcoins, there's basically the same level way up there, which like literally means that this market has another 25% to go, in this case, Ethereum, and it's underperformed quite a bit recently. And I think it's just purely a function that if people were going to buy anything, they were going to buy the thing that the fundamental news that was driving it, right? Buy Bitcoin, buy the rumor, sell the news. So why bother buying Ethereum? But notice, as of yesterday, look how this thing has just absolutely come to life. And you might even argue there was a really wicked pullback there. And really, probably the smart money was actually buying that dump, getting ready for this shift. Because once the Bitcoin ETF thing is launched, the next fundamental news event is what, probably four months away, middle of April, right? So what's that? January, 1, 2, 3.5 months away. The question I would have now is, Wall Street is, keep in mind, Wall Street just made an absolute killing just with the listing of all of these ETFs. Just the fact that they're listed means that every single one of these players now has a whole shitload of these shares on the books at whatever the price is. You can imagine, like for example, what's his face? Novogratz, right? One of these is his. And now all of a sudden he's long just a truckload of this. You can imagine his balance sheet just went absolutely crazy. Which one is Novogratz? This is one of these darn ones. Galaxy, there it is. So there you go. Mr. Novogratz, how many shares did he list? How many shares does Novogratz have of this? Getting paid a finder's fee because I'm the CEO and I'm so awesome. Hey, we'll give you 1,000,000 shares, Mr. Novogratz. Boom, you just got a payday of $43 million. Merry Christmas. Do you think if he has permission, he's going to be selling any of that to pay for any of his tattoo removal? Anyway, so you get the idea. Wall Street just made an absolute fortune on this event. An absolute freaking fortune. Oh, by the way, there's our buddy Kathy Woods. She just cleaned up, cha-ching, right, on the listing of all this. So now the problem here is that these are all crack hose. Or maybe that's a good thing. All depends on your perspective. But do you think they're going to want to come back for some more? And is there another big crypto that we might go through the whole damn process? And it's going to be a buy the rumor, and then we get up into technically appropriate levels, and then it'll be sell the news kind of scenario. I mean, this is the way the capitalist process works, people. So I hope you enjoyed that rant. I hope it was relatively illustrative. Pretty cliche, if you ask me, what's going on here in the market right now. The issue here, of course, is that these issues are being heavily manipulated by Wall Street and the 1% now. And I think we have to acknowledge that. So anyway, let's head on over to the after party. That was about a half an hour. So I hope you enjoyed that market summary. Again, I don't know whether I gave you too much value, but it was an interesting conversation to have with you guys. And you can see actually everybody's bleeding out now. So I wonder if we're getting to the point where people are maybe taking some profits heading into the weekend. Anyway, we'll cross that bridge when we come to it. All right, everybody. Have yourselves a good rest of your, I guess, Friday. We've got broiler chickens coming up on Sunday. We have the raffle. So be sure to be a part of that. Hopefully, Chris puts the link to the raffle in there. You win yourself a free seat to our education program. And Monday is Martin Luther King holiday. So going to be a bit of a quiet market. And of course, we know through these bank holiday events, probably expect to see some pretty wild crypto action here through this weekend. And it'll be interesting to see once we get to Tuesday morning where price is. My hunch is it's probably going to be about where they take it out. But through the weekend, through these 3 days, you might see some pretty wild action here. So just be patient. Slow and steady wins the race. Don't chase. Remember to trade your setups. 3 unrelated reasons to justify your acting. If you're going to take a risk in the market, make damn sure to quantify the risk that you're going to take and just follow your plan. All right. Have yourselves a great day. See you all Sunday for broiler chickens and the raffle. PMA for the win. All the best. And bye for now.